Andrew Neil has hailed a Brexit Britain victory as he celebrates a $100 billion, £75 billion win, citing that the UK is fast becoming the capital of Europe for investors. The news comes as Britain sees a surge in UK-based so-called unicorn enterprises, often involved in the tech industry. In business, a unicorn is a privately held startup company valued at over £850 million, $1 billion. The term was first popularized in 2013 by venture capitalist Aileen Lee, choosing the mythical animal to represent the statistical rarity of such successful ventures. Taking to Twitter to celebrate the news, Andrew Neil said, "Britain leads the investment boom in the European tech industry, with more than $100 billion of venture capital invested this year, 3 times 2020. He continued, "UK top of capital invested plus no. Of unicorns created. Cambridge designated Unicorn Capital of Europe." Such companies located in the university city include Cambridge Mobile Telematics, providing full-stack telematics solutions and valued at £1.13 billion, $1.5 billion, Semar Surgical, providing the latest in modern surgical technology, valued at £750 million, $1 billion, and Decr, a biotechnology company specializing in turning existing drugs into generic versions, valued at £923 million, $1.23 billion. Enjoying the success, Colin Combe over replying to Mr. Neil said, a timely tweet which underlines the need for disinvestment in Eurozone prior to destabilizing changes to financial regulation in the zone. He added, the UK is a safe haven for investment. In 2020, UK investment in tech was the third highest in the world, hitting a record high of £11.3 billion, $15 billion. This year looks set to notch up more records, with £6.2 billion, $8.3 billion, invested in Q1 alone. UK deep or hard tech investments rose by 17% last year, the highest rate of growth in that market worldwide. Monies raised via tech and consumer internet IPOs doubled between 2018 and 2020 on the London Stock Exchange, with more flotations in the offing this year. Aside from deep tech, including robotics and AI, and fintech, in which the UK is world number 2 after the US, so-called impact tech is emerging as another hotspot, as organizations look for help in hitting the UN's Sustainable Development Goals, SDGs, and the UK's net zero target. The digital sector did well during the pandemic months as companies drifted towards mobility, remote working, cloud platforms and other tools. Despite Brexit, the tech industry was not ahead of its rivals in other European countries, but the gap has been widening since then. Britain is at an advantage as it is aided by an incredibly high level of productivity as a whole. Following Brexit, Boris Johnson's government is trying to devise its own plan for digital regulation. The Cabinet has recently proposed a major new set of pan-EU rules, Digital Services Act and Digital Markets Act for the digital services and tech giants. However, much like other European nations, in spite of the success the UK has seen in investment, a major hurdle still has to be overcome. A report published by Total Jobs and JobSite has highlighted that the technology sector is grappling with a skills shortage. Around 3 out of 10 IT workers believe their firms needs new talent to handle the increased work and boom in the sector. The Total Jobs report stated that the various factors that are slowing down the tech sector, like an aging workforce, have lasting effects of the COVID-19 pandemic. The survey highlighted that the industry needs a workforce with specific skills like knowledge in artificial intelligence. But at present, hiring managers have been an uphill task. Though London is still Europe's most active stock exchange, it has faced challenges after the UK's departure from the EU. Many firms have quickly moved to Amsterdam and Paris after the post-Brexit rules, which came into force on January 1. However, with new investment flooding into the so-called unicorn enterprises, Mr. Neil's belief in UK towns becoming the capital of Europe has quashed fears of a mass exodus.